All right, welcome to Talkin' Investing. I'm Tom, and as always, this is not financial advice. Today, I want to talk to you about the market overall. I also want to talk about Bitcoin. So we're going to talk about the U.S. market indexes as well as Bitcoin. I want to point out a few crucial dates that are coming up over the next week and a half that are going to have an impact on the market. And then I want to talk about what direction I think the market is going in. So I think we're having a little bit of a shift right here. So it may be a little too soon to call it, but I want to show you what I'm looking at and tell you what I'm thinking. So this is not my normal video. Please let me know down in the comments if you guys like this video. I think it's an important part of investing is to just take a step back and look at the big picture from time to time. And I'm not sure I do enough of that on this channel, so I'd like to add some more of that. But you guys let me know what you think in the comments section. Also, if everybody could please smash the like button, I would really appreciate it. It helps the channel out a lot, and I want to thank everybody for all your support. Okay, let's just start out by looking. We're in the middle of the trading day today here on Friday, September 9th. So right now, it's green across the board. Now, I will caution everybody, 2022 has been a year where Friday afternoons tend to turn red. So I think this is going to be the very first indicator as to whether or not there's been a little bit of a change here. But you'll see right now the S&P is up 1%, the Dow is up 0.78%, the NASDAQ is up 1.5%, and the Russell is up 1.4%. So the Russell and the NASDAQ are leading the way, but everything is very green. I'm also just going to point out right here, Bitcoin is up over 10% in the last 24 hours. So I'm going to do a little bit more talk about that. We do talk about Bitcoin and the Bitcoin miners a lot on this channel as well. So if that's content that you're interested in, remember to subscribe to the channel and hit the notification bell. Okay, so that's pretty much a green day across the board in the equity markets. And if you look at Bitcoin and Ethereum, Bitcoin is up huge, 10+%. Ethereum's up, over 5%. So it's a green day in the cryptocurrency world as well. So I want to take a look at a little bit larger trend because we had a very nice relief rally across the board in July and early August. That peaked at around August 15th, and then for the last almost month, it's been pretty much downhill from there. But I do think we are now seeing a reversal. So I will tell you, I'm going to walk through a scenario where I feel like it's possible that for the short term anyway, we have bottomed out. New CPI numbers are coming out next Tuesday morning before the market opens. So today's Friday, which really means you only have today and Monday to trade before those CPI numbers come out. So stay tuned later in the video. We're going to take a look at those. And then the following week, Wednesday afternoon, so that is a week and a half from now, the Fed will tell us what their decision was and what the rate hike is. So we're going to go through that as well, because those are two things that, if something goes seriously different than expected, it could derail the scenario that I'm talking about, or it could reinforce the scenario that I'm talking about. So just quickly, I'm not going to do a lot of technical analysis, but this is the SPY, this is the SPY, this mirrors the S&P 500. So you can see that this bottomed out just in the middle of June. So if you look at that yellow arrow, basically that was a month and a half, basically almost 2-month relief rally, and it was across the board. So this is the S&P 500, but when we go to the NASDAQ, you're going to see the same thing. When we go to Bitcoin, you're going to see the same thing. So this was a tremendous relief rally. It did seem to end about August 15th, and since then, there was about 3 weeks where we were headed down. I do think, however, we're going to look at September 6th and say that that was a bottom, because it looks to me like everything somewhere around that day, everything bottomed out and it hit some pretty technical levels, and we seem to be bouncing off of those levels, and we seem to create a line of support. And we have had now 1, 2, 3 very green days on the S&P 500. I mean, today we gapped up and we're green from there. So 3 solid red candles. Now, 3 days does not a trend necessarily make, but given the way this overall setup is looking, I do think we're poised to head upwards over the course of the next maybe month or month and a half. And again, we're going to look at those 2 days in the middle that could be a whammy, which is the CPI data and the Fed data. But I'm going to explain to you why I don't think that's going to derail us. So I would expect that we're going to keep retesting this line. So I will not be surprised, if we're headed somewhere like this over the course of the next couple of months. So I'm not expecting to go up in a straight line, and I'm not necessarily saying that that is going to last forever and the bear market's over and we are now in a bull market, but I do think we are set up to have another very nice relief rally at a minimum. So for me, I tend to use options to trade on these rallies. I'm a buy and hold person mainly for my stocks, so I tend to add to my positions at low points and dollar cost averaging over the course of time. Obviously, this is not financial advice, and do not use options if you don't know how to use options. Options have a much higher risk than stocks do, but if you know what you're doing, they can be a very good tool to swing trade during these types of times in the market. So let's go to the NASDAQ, because you're going to see we have the exact same setup. Okay, this is the QQQ. This mirrors the NASDAQ. So you're going to see I'm not going to go through the whole thing and talk you through it, but we basically have the identical setup. We have a low here on June 16th, so that's within 1 day of the SPY. And then we have an ascending line of support here. We had a touch point on June 30th, another one again on July 14th, and then again here on September 6th, which was the same day that we bottomed out in the SPY. So again, since then, we've had 1, 2, 3 very green candles. So the NASDAQ is setting up very similarly to the SPY. I'm expecting the same type of rally across the board, because it does look like across all of the indexes, we're having the same type of setup. Okay, so the first thing is CPI data. CPI data comes out Tuesday morning at 8:30 in the morning. So that is before trading starts. So I want to take a look at what the expectations are, because this is all about expectations. After this, I'm going to talk about the Fed, and I'm going to talk specifically about what Jerome Powell said, some comments the other day. But first, let's take a look at CPI. So you can see it looks like in the US, we peaked here at 9.1%, and this was in June. The July numbers came in at 8.5%. So that was some relief. That was a part of why we got a relief rally. However, that is 1 month, and that is certainly not enough to create a trend. And the Fed has been extremely adamant about this. So Jerome Powell has gotten out every chance that he can to try and let people know 1 month is not a trend. And oh, by the way, 2 months is not a trend either. So we'll talk about that more when we look at the rate hikes, but he's been crystal clear that regardless of what comes out on the CPI this month, that will not be enough to sway them from focusing on inflation as the #1 problem right now. Okay, so you can see consensus here is that it's going to be at 8.1 this month. So that would be a nice drop off. So from 9.1 to 8.5 to 8.1, that would be an excellent trend. So personally, Jerome Powell aside, that would give me a lot of comfort that we're heading in the right direction. I think a lot of people are afraid that this first reduction was really just a pullback in the price of energy as energy and oil had skyrocketed. We do want to see more of a trend, and we probably do need to see 3 or 4 months put together where this continues to trend in the right direction. And we want to see it more broadly across the market, not just in oil or energy. Okay, so we're expecting 8.1. The previous was 8.5. So I'm going to tell you what I think about this number. I think that if we are anywhere between 8.1 and 8.5, I don't think it's going to have a big impact on the market. It may have an impact for 1 day. Let's say we come in at 8.5 again. That would be very disappointing. You can see consensus is at 8.1. And worse than that, if we came in at 8.6 or 8.7, that would be a move up. So I do think there would be a very short-term hit to the market if that happened, but I don't think it would change the overall picture. And when we get to what the Fed is doing, I'll explain why I think that. Having said that, I'm not expecting to go sideways or go up. I am expecting, 8.3 to me would be a win. Anything lower than that is even better. Consensus is at 8.1. So we'll have to wait and see what happens. Okay, 1 week later, we get the Fed. So on September 21st at, I think about 2 o'clock is when Jerome Powell comes out and gives his speech, and then we find out what the Fed's decision was. So you can see the market right now has shifted. This is the market's forecast. This is the percent chances of a 50 basis point hike versus a 75 basis point hike. Just 2 days ago, before Jerome Powell spoke, this was at 40% 0.5 and 60% 0.75. Jerome Powell had a speech yesterday morning before the market opened, and, the market was down for about an hour based on that speech. But really, as the market digested it, he's really just repeating the exact same thing. There was one new little nuance that he added, and I'll tell you what that is. But essentially, he's signaling, like I said, he is getting every opportunity to come out and signal that, look, inflation's our #1 priority. The Fed's target inflation rate is 2%. We're in the 8s and the 9s right now, so we are not even close. So, he reiterated that, the fact that we had 1 month in downward trajectory is not a trend. Even if this month comes down, that will not be a trend, and inflation will remain the Fed's #1 mandate until it approaches their target number. So given that speech, and really that's something he has said every single time he's been out over the last several months, we switched now to an 86% chance of a 75 basis point hike, and that is not this coming Wednesday, but a week and a half from now on Wednesday. So the reason I think CPI is not as important, unless something disastrous happens, I think everybody already knows there's going to be a 75 basis point rate hike. It's already priced into the market, barring some awful CPI data where the Fed was forced to maybe do more than 75 basis points. I think all of this is already known. It's all already priced in. So if we end up getting a 1.0 basis point hike, that I think would reverse the momentum in the market. So this is just a recent history of what's happened. You can see, the Fed rate was near zero. We had a 1/4 point raise in March. We had a 1/2 point raise in May. And then we had back-to-back in June and July, we had 0.75, 0.75. So it looks like we're going to get a third one of these in a row. So this is going to match expectations. So again, the only scenario that I see derailing us is if the CPI data is so bad that this ends up, the Fed has to start considering a 1.0 rate hike. So that would be a full percent. And right now, the market's not expecting that at all. Lastly, I want to take a look at Bitcoin because over the last few days, particularly actually today, overnight last night, Bitcoin had a gigantic breakout. It's up about 10% over the last 24 hours. And I think that this is a reversal for Bitcoin as well. So Bitcoin experienced the same thing from the middle of June to about August 15th. There was a very nice relief rally. Bitcoin was actually up 43% in that period of time. In the 3 weeks after that, there was a pullback in Bitcoin as well as the entire market. But here again on September 6th and again on the 7th, although we reversed on the 7th, it looks like Bitcoin hit a key level of support, and that was a local bottom. Now you can see we did not get all the way back to the bottom and retest the lows from June. And that was kind of a flash crash down to 17,500. You can see even that day that we hit that, we did close closer to 19,000. So we've clearly revisited that point. We had a daily candle close at around that point. And you can see I've drawn an arrow here. This had turned into a line of resistance for a couple of weeks. But yesterday, as we tested this line 2 days ago, yesterday we broke through this. And the second we broke through this, you can see we absolutely just took off. So we put this way in the rear view mirror. So that doesn't mean we won't come back and retest some numbers. Again, I do expect the same type of up and down action as we have what I think is going to be another relief rally here in Bitcoin. I do also think there is a chance that beyond a relief rally, in all of these scenarios, there is the potential that we've turned the corner and this was the bottom. So it's always dangerous to call a bottom. We could always retest these numbers. So everybody, please be careful. This is not financial advice and nobody knows when the bottom is. But it does look to me like we're starting to create a formation where we're about to have a second very nice relief rally in a row. And at some point, one of these turns back into a bull market. So that's my overall update. That's what I think everybody should be paying attention to and watching over the next 1 to 2 weeks. So let me know again in the comments if this is content that you guys are interested in, and I will update this. So that's all I've got for you right now. Thanks so much for watching, and I will see you in the next video.